Hello traders and welcome to another video review. Today is Friday, November 3rd, 2023. Let's take a look at the Forex economic calendar, what is going on for the first Friday of the month. So it's the first Friday of the month, and it means that today is the non-farm payrolls Friday. So at 1:30 this time, at 1:30, we will have the release of the non-farm payrolls, and as you can see, the previous reading was 336,000 number, and the forecast today is 180,000 only. So it's roughly a half of the previous number. Together with the non-farm payrolls, we got the average hourly earnings 0.2%. last time 0.3 is expected. Unemployment rate should stay at the same level of 3.8% whatsoever. Just a little bit later, quarter to 3, and at 3 o'clock we got the S&P Global Services PMI and ISM non-manufacturing PMI data scheduled for release, and both of them looking good. Both of them are still above the level of 50, which means the expansion of the industry. So this is the key event of today. So there is no chance for the any other event to be much more important than this one, especially non-farm payrolls. So today everything is about the US dollar. So let's find out what is the market doing, what's the technical scenario for the next few hours, and we are going to start with the euro dollar. So let's just switch to the euro dollar chart, and you can clearly see that on the euro dollar right now we are range bounded because the market is it keeps positioning itself ahead of the NFP data release, and we can add even one more line here on the chart, so we can have now what? There you go, short-term trend line. As you can see, it's been tested once, it's been tested for the second time. So the upside is clearly defended by the bears. The level of 1.0668 up to the 1.0695, so this is like a 30 pip zone is now the supply zones, and bearish activity is very strong inside of the supply zone. On the other hand, we got the moving averages. The market is trading above the moving averages, 50 and 100 moving average on the 4-hour chart, 1.0603, 1.0507 respectively, and then of course we got the local technical support 1.0523, occasionally 1.0518. So momentum wise, the momentum is positive. Is not that strong, only 58 points. Nevertheless, the momentum jumps from one zone to the other zone, from the negativity to positivity, and as you can see, the whole market is kind of a range bounded. It trades roughly, well, from the 1.0695 towards 1.0523, and then back up, and then back down, and then back up. So the whipsaw trading, range bounded trading conditions, some sign of the consolidation, some sort, are still present on the euro dollar versus the euro versus the US dollar chart. This is 4-hour chart, of course, and on the longer time frame charts like day and weekly, there is still a downtrend in the background. So the outlook remains bearish in the mid and the long term. So that was the euro dollar. Let's take a look at the other market that might, of course, be affected by the let's say NFP payrolls, and this is gold. This is gold 4-hour chart. Let me just show you guys the gap, because we got the gap on the chart. I need my, let's say I need the rectangle, so the gap is roughly around here. Let me just take, there you go. The blue rectangle is the gap roughly. So it's between, let's say, 1,834 and 43, so roughly $10 gap. As you can see, we've been moving up and up and up and up towards the extremely overbought market conditions. We got the bearish divergence here, and then we are coming off the bearish, the extremely overbought levels, and right now the swing high, let me just take my magnet, the swing high was located at 2008. So there was a point in time not so long ago when the ounce of gold was above the $2,000, and this is roughly the zone, very important zone for the bears, because the bears will push from this zone to the downside. So it's a supply zone, and we got this short-term trend line here, very short term. It's not that big deal. So that's the situation with the trend line. And of course, we got the technical support. One of these technical supports is located here at 1946. Let me just zoom out to see if there's anything else. Yes, there's one more, as I thought. There's one more roughly around 1952. So this is the very nice, let me just leave it like that. Very nice technical support. The technical support has been tested. The market bounced higher, than finally new swing high, and then rejection of this new levels. We went back below 50 periods moving average, trying to position itself ahead of the NFP in the middle of this range here, between this low and this high. So we are directly in the middle of this range, and right now, of course, it's all about the NFP payrolls. Very nice increase here on the gold market. Very nice movement to the upside. Where is my price range? There you go. The price range will likely be around 10%. There you go. Yeah, 11% to be honest. 11% increase from the lows of the October, beginning of the October. So that's almost 1 month of the move right now. Momentum wise, we are bouncing from the level of 50. However, the market managed to go even towards the level of 42 points only, and then bounced back up just above the 50. So right now we are in the middle of the range, and the momentum is neutral. So this is clear as the sun that the market is positioning itself ahead of the NFP payrolls, and it all depends whether the NFP payrolls will be good enough to sustain their movement to the upside or to reverse lower towards the technical support. So it's all about the NFP payrolls these days. So that was the gold market. Let's take a look at the S&P 500 to see what is going on here. This is 4-hour chart, and let me establish the recent movement on the on this S&P 500 chart. There you go. So we got the swing, last swing low 4,101, last swing high 4,400. We already broke above the level, all of those Fibonacci levels. So right now we got this minor technical resistance 4,310, and we are just testing this level. So very nice movement to the upside, just above the 61% of the Fibonacci retracement. But if you take a look here, you will notice that we are testing the extremely overbought market conditions already. The level of 70 points on the RSI has been hit. So this market will position itself ahead of the NFP payrolls as well. So this is S&P 500. You can take a look here on the corrections. So if we take, for example, let me just take my my price range. So from this low to this high, historically 4.67%. Okay, from this low to this high, 4.72. So almost equal corrections, right? Let's take a look how much is the last one. From this low to this high is 5.22 already. So the recent movement to the upside is bigger than the last two historical corrections, which means there might be an overbalance of the price, because not in time, only in the price. But ahead of the very important data release like the NFP, until we have a clear breakout and movement higher, it's solid movement higher, we cannot rule out that there will be some kind of a fake breakout and then reversal. Okay, so please notice the fact that generally the overbalance is possible. However, it's only price overbalance, and just because there is a key data release, we might reverse. That might be fake movement to the upside. All right, so just ahead of the NFP data release. So please pay attention to the time. The US market is still 1 hour behind. So instead of 2:30, today's NFP release is 1:30. All right, so don't forget about this as well. That's everything for me for today. We just discussed all of the important markets that might behave very erratic during the NFP payrolls data release. We talk about the euro dollar, gold, and the S&P 500 index. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.